Alright everyone, Cowboy Trades here, welcome back to the channel for another update on KDA. So, something looks like it's playing out on the charts. KDA is currently flirting with death. I've actually got a new price target to mention that I haven't talked about in my previous videos. So, let's dive into everything that's going on right now. We've done quite a lot of analysis on this in the past few weeks or so. So, I'm going to zoom through the higher time frames. Of course, on the volume profiles, we've been talking about the fact that we might reside around about this 89 to 90 cent region for quite some time. And I obviously mentioned as soon as we start losing this, we are going to fall all the way down to 70 cent. Now, this is on the monthly time frame. On the weekly time frame, we are actually green at this moment in time. When in doubt, I always do like to zoom over and come over to the Heikin-Ashi candles to smoothen out the trend. And as you can see on the weekly time frame, for the past 3 or 4 weeks, KDA is showing extreme weakness. And to me, this looks like a bar pattern slash a rounding top, which would be predicting over on this Bittrex chart, this was a lot more brutal than others. But if we're coming over to another chart, so for example Coinex, this is where the majority of exchanges had KDA's bottom at 76 cent, and you can see since then we had a huge run up to the top, and in fact you can see, you know, spike, 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 and we're kind of lollygagging and getting ready to break back down to the base of this at 76 cent, which wasn't the price target that I wanted to mention, but nonetheless, did just want to give you a quick update on the higher time frames. Heikin-Ashis are absolutely melting through the floorboards right now, and it looks like we're not going to be holding this 89 cent volume profile for very long. Now, higher time frames as well, as we've been talking about this nasty head and shoulders pattern with a price target all the way down here at 69 cent, which is pretty much our take profit on our trade. We'll update that in just 1 second. Is still 100% in play, but here's another pattern that we have not talked about yet. You can see that since we broke down from this right shoulder, we've actually formed a very beautiful bear flag. I don't know how I haven't mentioned this one before, but if we do extrapolate the price target of this from the breakdown here, the bearish breakdown is 53 cent. If you want to be a little bit nitpicky and conservative, you can draw it from the retest and you could see that there is a price target around about 55 cent. I personally think it always makes more sense to draw it from the breakdown. So this would be calling for a KDA price target down at about 53 to 54 cent. Now, if we do come over to our price targets, this just amalgamates, you know, all of the charts that we look at, and we point out price targets from the volume profiles, head and shoulders, bear flag breakdowns. We've also looked at KDA BTC pairs and looked at Fibonacci's levels, you know, talking about where we should be coming down according to these charts. So this is basically just encompasses all of the price targets we've mentioned on the channel before. So let's see, so round about 53, let's just call it 54 cent to approximate. We don't have a exact price target in confluence with this region, but at the bottom of the volume profiles, we do have support coming in at 50 cents. So if we do come back over to here, you can see what I'm talking about over here is if we get rid of this green box very temporarily, you can see there is a huge, very nice cluster of support at all the way down here. Sorry, it's the next one down. It's this big old one here at 50 cent, 51 cent approximately. So they're pretty close on par with each other. And you can imagine, you know, if we've been residing at, you know, this 89 cent for, you know, the past couple of weeks or so, holding it as support, you could imagine that when we do break down to this 51 cent or so, this is probably going to be another area where we spend a decent amount of time on and around. So let's mark a new price target, 53.5. We can be approximate here. Bada bing, bada boom. Let's mark this as purple, thicken the trend line out, put it on 4, and then this is the bear flag. Let's just call it bear flag. We know it's a target already. Bada bing, bada boom. There we go. So we got a new price target in town, and this is all the way down here from where we are at this moment in time. I don't know why TradingView is being extremely laggy for me today, but this is about another 40.5% drop. Now, this is personally not the price target I'm calling for in the immediate short term. As you do know, if you're a veteran of the channel, we take things one price target at a time. And since we pushed all the way up to 112 when I told you to enter a short, like I said, KDA is extreme, or TradingView is extremely laggy right now for some reason. Up here at 112, we were calling for a breakdown all the way down to 69 cent. This is still the price target I've got my eyes on in the immediate short term, as this is a big volume profile. I do see us breaking down and finding support here in the local time frames before a bounce. This will give time for EMA ribbons to catch up before that next break back down, and then of course we can finally see this bear flag price target. So I imagine I'll be talking more about this price target in the next few weeks, maybe in the next month or so. But of course, one price target at a time. We were predicting a 40% drop, and we've only got about another 25% of the way to go down on our trade, and we will update that in just 1 second. So bar this, the only other thing that I wanted to update really is the fact that we are coming into contact with the short-term moving averages. And as we do know, if you are a veteran of the channel, this is not a good sign. I believe I've actually got a specific chart for reversions to the mean on KDA. If I can go and find it, here we go. This is the chart I'm looking for. You can basically see what happens when you come into contact with the EMA ribbons. You have a failed move equals a fast move in the opposite direction. Here you can see came up, retested the long-term moving average, broke down. Here you retested the short-term moving average, broke down. You can also see, I haven't encompassed every data point, but you also touched short-term moving average here. Not that it's too important. You can very clearly see the trend over here. You can see we touched the short-term moving average and touched the long-term moving average. Failed move equals a fast move in the opposite direction. And over here, failed move equals a fast move in the opposite direction. This is actually where we're trading from, up at 112. This is the last area that I told you I would be entering a short. And as of the time of recording, on our 3x entry trade, we're down 20%, which means that we're in 60% in the profit at this moment in time. And of course, we've got our stop loss sitting very peachy at 105. I'm very, very confident that this is not going to get tagged, but nonetheless, we'll talk about potentially amending that in just 1 second. So we've basically completed another reversion to the mean. Like I said, we see these all the time, and this happens all the time in bear markets, and reversions to the mean happen in bull markets, but they just look like this. Reversions to the mean and bull markets just look like this. So for example, these would be green and you'd be bullish, you revert back to the mean, break up, revert back to mean, break up, revert back to the mean, break up. But of course, we're not in a bull market right now, we're in a bear market. So we're looking at reversions to the mean taking place in terms of bearish retests of the EMA ribbons. And it looks like we're consolidating just underneath the short-term moving average. We've had 1, 2 daily candle body close rejections underneath the short-term moving average. And right now it looks like we're obviously, as of the time of recording, this can very well change in a couple of hours or so, but this does look like this may be forming, this daily candle may be forming into a doji pattern at this moment in time. So it's really not looking good for KDA. On the 4-hour time frame as well, we look like, it looks like a very, very ugly head and shoulders pattern. Not too much to take not too much to take much note of. I'm really not the biggest fan of looking at the 4-hour time frame anyway. This also to me looks like a big run up, spiky hair, bark pattern back down to the floorboards at 86 cent, which will break us through the floor of the volume profiles, and then once again push us beneath the 4-hour time frame. So I mean, pretty much every time we flipped bullish on the 4-hour EMA ribbons, it's always been a very, very quick move, and obviously the daily is far more important. So before we do update our trade, just very quickly, let's look at the oscillators. So daily time frame, the stochastic RSI is pushing up to, or at least the blue moving average is pushing up to 94.5. What happened the last time we exceeded this 80 line? Well, you can see it topped out here and crossed bearish all the way at, what do you know, 112, the position that I told you to enter a trade from. Now, am I currently telling you to enter another trade from KDA? No, I'm not telling you to enter another trade. If you've been watching the channel, you know that we enter from the best positions of strength. We entered all the way up here at 112, so I'm not telling you to enter down here at 90 cent. Once again, I told you to enter up here. The previous trade before this, I told you to enter at 140. We always like to trade from the optimum position of strength because, some of these oscillators like the MFI, the stochastic can push up a tiny bit more. The squeeze momentum indicator can push up a tiny bit more. So if you are entering a trade right now, there is a possibility that you need to factor in that we could push up to 98 cent, just like we did over here and over here and over here. Well, as always, nothing is guaranteed in trading, but it is looking like this could be a top formation playing out for KDA right now. Like I said, if you're going to enter a trade, you're not entering the same trade as me because I entered at 112, and if you are entering a trade, do make sure that you're taking into consideration that we could push up to 99 cent or $1 or so before heading back down to the downside, because this is of course a possibility, even though it's not what I'm predicting. I'm personally predicting we are topping out at this moment in time. Stochastic is extremely overextended, and if we're looking at the MFI, I'm not the biggest fan of drawing patterns on here, but nonetheless, the technicals, the technicals do play out. You can see that we are currently putting in a head and shoulders formation on the MFI, indicating liquidity should probably be heading back down to the downside. You can very much see a linear downtrend playing out right now. And we've also exceeded the heart line, and now is starting to turn down. The last time we did this was here. We were at, 112, and we started to break down. The time before that, we were here. We exceeded the heart line and started to break down when we were all the way up here at 142. The last time before that, we exceeded the heart line here over on the 5th of October, and we were all the way up here at 150 and pretty quickly broke down to 120. So a lot of these oscillators are definitely in agreement with my analysis, and once again, another reason why I'm not telling you to enter a short is because if we do look at the squeeze momentum indicator, we are literally on the cusp of resetting momentum at this very moment in time. And you can see the last time this happened, we actually pushed up a tiny bit further, up to 112, before we broke down to the downside. The time before that, we pushed over into bullish territory for, 1, 2, 3, 4, 5, 6 days or so before flipping bearish, and you can see this correlated to this top over here. You can see we reset momentum over here, pushed up a tiny bit further, and pushed up to here. So I imagine this actually pushed up to the long-term moving average. So if we're looking at this tiny retest, you can see, you could have got excited as we were pushing into the short-term moving average because momentum was resetting, which is pretty much what we're doing now. But what you can actually see, I hate the EMA ribbons like this. You really only need 2 moving averages, short-term and long-term. But nonetheless, you can see you could have got excited as we got rejected for 2 days in a row underneath the short-term moving average, but we did have enough momentum to push up to the long-term moving average before breaking back down. So once again, I'm not telling you to short at this moment in time. If you do short 100x leverage, 10x leverage, and we push up to this level, don't blame me, this is your trade, not mine. Once again, I'm still sitting in my 3x entry trade from $1.12. This is in 60% profit. If we do push up to the long-term moving average again at 98 cents, I will be posting a new trade for us to get into double down on our, to double down on our guns, or to flex our guns, whatever you want to call it, to double down on our trade, basically. But yeah, this is kind of what I'm looking at this moment in time. I really don't see any need to amend my stop loss at this moment in time. I think the stop loss is very healthy. I mean, 6.5%, so 6, 12, 18, 19.5% profit approximately. Of course, it's been open for about a week or so, so that might be about 18, 17.5% after funding fees. But nonetheless, as you know, if you're a veteran of the channel, the Cowboy family, we have absolutely no problem holding trades open for a long period of time, as long as they eventually do come down and give us crazy profit. The last time we were trading was up here. We had 2 trades that were collectively, one trade was 280% profit, the other trade was 280% profit. That was a decent amount of my portfolio that we managed to 2.8x. Once again, no new trade is presenting itself at this moment in time. I just wanted to reaffirm with you that I am very confident in my trade right now, and looking at the oscillators are telling us, hey, we are probably topping out now, but there is a slight chance on the offset that we do push up to 97 cents, although I don't believe it's likely for other reasons. For example, like if we do come over to Bitcoin, you can see Bitcoin quite recently, once again, just put in another lower high from the top of this formation. We are in a consolidation pattern within a bearish pennant at this moment in time. We're turning down from the EMA ribbons, and I do think we're getting ready to break through the floorboards. I'm also in a Bitcoin trade at this moment in time, so once again, picking and choosing my trades very carefully. And if we do come over to the E-mini futures, looking at the S&P 500, we are currently in a diamond pattern, a diamond consolidation pattern. Technically the name for this is a diamond bottom formation, but that's just the name of the pattern. I don't believe it will hold due to liquidity conditions. If you want to learn more about my stock market thoughts, I make many videos outside of Bitcoin and KDA, decision time, imminent doom, S&P 500. We look at lots of different charts that other crypto YouTubers do not look at, because it is very important when doing technical analysis on altcoins and Bitcoin to make sure you've got a basic understanding of how the economy works and a basic understanding of how the stock market affects cryptocurrencies like Bitcoin and KDA. And with all of this, of course, looking at the KDA TA by itself, it is very bearish. I won't dive too deep into the stock markets because I know that's not what people want to hear for altcoin updates. But yeah, all in all, KDA looks like it's getting ready to break back down to the downside, and it's currently flirting with death at this 90 cent region while it's sitting at the short-term moving average. Keep an eye on 97, 98 cent. If we do, on the off chance, push up to this level, turn notifications on, because a new trade will be coming out. So all I've got for you for this video, as always, my friends, if you do appreciate the content, let me know down below by leaving a like and a comment. Share the videos with your friends if you do enjoy the content. And if you want more charts from me, memes, economic data, posts, more about my personal life, be sure to head over to my Twitter at 618_cowboy. Come and join the Discord if you haven't already. If you click on my channel and click on about, you can see I've got my Twitter, Discord, Instagram, and official merch all linked down below. Hope to see you over there, but for today, all I've got for you, cowboy out, peace.